Hi, everyone. It's Troy Sage. And on this episode of Real Estate Talk, I have a special guest, Chris Madrid. And we're going to be talking about the seasonality of the real estate market. It's the end of 2022. So let's talk about what happens at the third quarter and the end of the year. We're going to be talking about the crash or the bubble. And is it real or is it not real? We're going to talk about interest rates and special programs. So this is a great episode for buyers and sellers to understand what's going on with the market and what you can do at the end of the year and what to expect the first quarter of next year. So stay tuned and check it out. So I'm extremely excited to have one of my friends and one of the top lenders in the area, Chris Madrid. Man, thanks for being here. I'm so excited
Yeah,
about
man, absolutely.
the market, man.
No, thank you. Thank you so much for having me.
So it's the end of the year. It's the end of 2022, and I've been hearing from a lot of people here in the market. They say, "Oh, it's seasonal, and the market slows down, and maybe I should wait till next year to buy, so on and so forth." So, what are you seeing that's going on your end as a lender in regards to the seasonality of the market?
Yeah, no, man, I think there's two big components, right? Number one is yes, the seasonality, right? Most people who are not already in their home um don't want to have that push right before Christmas, right? Is the reality. So, sometimes they're gonna hold off right until just after the new year. Or when we see contracts come in, or customers that are getting out there to find a home, it's because they have to. October is normally the best time to sell, right? And I'm sure you have data to support that as well. But traditionally, October is the best time to sell if you're listing a home, because that normally gives enough time before Thanksgiving and Christmas, right? So if you're going to try to make a big push before the end of the year holidays, it's October. Well, this year, interest rates were at almost 8% in October. So a lot of that, oddly enough, a lot of that didn't happen. So it's so interesting. Is like right now it's kind of twofold, right? A lot of people are on the sidelines because of where rates were. We have some good news that we'll talk about a little bit later. But those are the two big things that I'm seeing, is a lot of people are on the sidelines because of affordability, right? And there's no question that it's more expensive at 7.5% than at 3.5%, right? Where essentially where rates were at the beginning of the year of 2022 in February. So those are the two big things.
Yeah, I agree with you. And to address that with you, when I'm talking to buyers and sellers in October, the beginning of the last quarter, they're very excited and they're churning and burning normally. But this year, we had that gray cloud where buyers said, "I'm going to hold off," because we got so used to that 3.5% interest rate that it was shocking to everyone's system. And then the 2-1 buy down program it seemed like it came out of nowhere, though. With your experience and mine, we both know it's been around for a long time. It just
Oh
wasn't
yeah,
it wasn't needed when we have
it
three and
wasn't
a half
needed.
percent interest rates.
Right, right.
And no seller is going to help pitch in when the market is so hot. So
In the seller's market, for
I,
sure.
I think the 2-1 buy down program helped us a little bit. But what I'm seeing now in November and December is I'm seeing on the real estate side that they need to push inventory. They got to get their stuff gone. And I'm also seeing investors, both buy and sell side, some are clearing their portfolio or part of, and other investors I'm working with are buying as much as they possibly can right now. Are you getting a lot of investor stuff coming your way?
Yeah, yeah, definitely. Yeah, investor purchases have definitely picked up. And we normally see that because of it's the end of a tax year, right? A lot of from a builder perspective, it is interesting because there's, you know, a majority of the builders that I work with, their years end, September, October, November, just depending on when they've cycled. So a majority of what we see pushed is that third quarter, beginning of fourth quarter, because that's their year end. Now, a majority of them at this point, so we're early December, are now on a new year, right? So there's not a big push, but um man, yeah, the things that we've been talking about all year, I feel like too, is is labor, right? I mean, there's still labor shortages, so there, you can't build, and you can't build homes if there's no one to build them. The as far as the other items, right? Microwaves, garage doors, a lot of the things that were an issue 3, 4 months ago. I think a majority of that has kind of worked itself out.
Yeah, I think builders, when it comes to the supplies, have
Supply chain,
yeah,
supply chain. There you
the
go.
supply chain. They've realized that okay, we can't guarantee we're going to have X number of 2x4s, X number of appliances uh, in hand in 30 days like they used to. They know now that it's going to take 60, 90, however many days it's going to take. So their planning has gotten really laser focused. What I'm telling buyers is this: on the buy side of buying new construction, we're still with a shortage of new construction. There's deals out there in regards to buying new construction right now, but the misconception is that a buyer is going to walk in at the end of the year and they need to blow it out before December 31st. And as you eloquently said, that's not the case. They in their book September, October, like I do. They're going to get a decent deal, but they're still going to wait 6, 8, 9 months to get keys unless they're really lucky to find standing inventory. And we're still not seeing that with new construction.
No, and man, all depending on price point, right? I mean, the new contracts that we've seen go under. I mean, they're still saying 12 to 14 months for completion. In some of the upper, 700 million plus, those are still taking well over a year, right?
Yep.
So that's the other that's kind of the other component too, that's a little bit difficult to gauge. But yeah, I mean, thankfully, um, if you are, as a buyer, right, if you're looking for a deal, we've before now, right, before the last 30 to 45 days, we haven't seen sellers entertaining any type of concession, right? And I've seen more, over the last 30 to 45 days, more concessions. You mentioned earlier the 2-1 buy down. That's a great option to. um so a lot of people say it's a great option to ease into a higher mortgage payment. I say it's a great option to pay for a refinance next year, right?
Sure.
We know
I
interest
agree.
rates are coming back down. The seller is contributing towards your interest rate buy down. Those funds, um, next year when we go to refinance you, when rates drop into the fives or sixes, if you're at a 7% rate, those funds can be utilized to essentially offset the cost of a refinance. So the seller pretty much prepaid, um, for you to have a lower monthly payment, an intro lower monthly payment, and then a refinance. The Man, what I would caution is I'm also hearing the flip side of, hey, call me when rates are back in the three or fours.
Yeah, good.
And yeah, I'm not going to call you, because that's it's one of those things where I feel like 5% will be the new norm in the next year or two, right? um Good news, interest rates are headed south, just not in a straight line, right? It'll be like this.
Well, that's
Over
life,
the
man. It's an EKG,
Yes.
right? And we got used to this flat line, and now all of a sudden, and maybe this is a lame description, but our market kind of had a heart attack at three and a half
That's
percent
a good point.
so
No
long,
doubt.
and it was life support. Boom, we got to re-kick this market because inflation was getting so high. What I like about the 2-1 buy down program is exactly what you said. It's different than an ARM. It locks in at a rate. There's no index where someone's going to guess. And there's a technique for buyers and an education for the sellers to make the transaction happen. The sellers need to realize that they're helping the buyer out. And at the same token, they don't have to eat all the cost because we still have high appreciation rates. So if it's structured properly, it's win-win for both parties.
Absolutely. Yeah, and that's you hit the nail right on the head, Troy, is education, right? If you have sellers that are listing high, right, listing over what comps are showing that they're going to be able to sell for, they're going to be pretty upset come 15 to 30 days when there is zero action or zero activity on their home.
100%. And one of the things, without getting into talking about all of our marketing and how we discuss things with buyers and sellers in this quick episode, is when I'm speaking with sellers is I'll show them a range. And if they want to go above the range, I will forewarn them that one, the property is going to sit on the market and become stigmatized. And if it sits longer than the buying public feels that it should, because we don't dictate the market, they're not going to look at the property, and then they're going to write really lowball offers. But if you can get a buyer into a property and it's still in the appraisal range, that's where we can structure this 2-1 buy down program to be win-win for both parties. I wanted to ask you about this. There's been a ton of videos and a lot of information out in the media about the crash of the real estate market. What do you feel about the crash thing?
Oh my gosh, man. Yeah, it's a great question. And it's one of my pet peeves right now and frustrations because if you listened, which a majority of people, not a majority, but several have, right? They get their news, they get all their information from the local news station. And if that's the case, then you have missed out in a 40% increase and almost 50%, I believe, in equity growth over the last 10 or 15 years. Because again, we can pinpoint like, hey, this is when the media has come out to say it's a bad time to buy. Yet data shows this is how much equity has been gained for the people that actually went out there and purchased. So yeah, here's the reality is that the what I hear from a comparison perspective to 2006, 2007, 2008, and now the biggest difference, right, is one, there was a lot more builders. They were building a lot more homes then, and I mean like 3 times more, right? I think in 2008, 4 million homes were being built compared to now, where I think just a little over 1 million homes are being built. It's not even the same. It's apples and oranges, right? It's not even the same market. The the inventory the inventory issue that we were experiencing 3 months ago, right? When interest rates were still in the 5% range, before they popped into six and sevens, that inventory issue and shortage hasn't gone anywhere,
Right,
right? And
right.
as soon as rates start to creep back down, which they already are, right? I've met it just today with the slight dip that we've had in interest rates, thankfully 0.5%, right? Interest rates have gone from low sevens down to mid sixes, right? Ton of calls. People are already back in the swing of wanting to get out there and look at homes again because that 0.5% makes, I mean, that's a really good difference in payment, right? So if rates start to creep down into the low sixes, high fives, we're going to find ourselves in not a buyer's market like we are right now, right?
Yep.
It will be back in a seller's market. We're going to be back at multiple offers and 5, 10, 15, 20, 30%. Gosh, we saw some this past year, 30% over the list.
Yeah.
And again, a lot of buyers are going to be back on and especially first time home buyers, right, that don't have the cash to make up the difference in those bidding wars.
100%. And what I'm talking to buyers about is this, especially at the end of the year. What I'm seeing briefly is serious sellers are selling and serious buyers are buying. And if you're going to wait until February, you're going to be in a pool of a bunch of buyers that all are going to dip their toe into it, and a bunch of sellers are going to see what they can get. And when we talk about the crash, my question to the buyers and sellers are, if it's a crash, how come prices aren't dipping? I mean, they're not crashing, they're dipping a little bit, but they're not crashing. So I was active in the real estate industry when the crash happened, which was a different world. You're 100% correct. The builders were building way too many homes, way too slow. They were taking contracts, and then when the market started to go, they just stopped everything. And we also had different type of lending back then. I think that's what the general public isn't remembering or don't know, is that we used to joke around in the office with the lenders that we were working with. And I would say, hey, this guy XYZ makes X amount of money. They're like, no problem, we'll give him $1 million. I'm like, so if you can fog a mirror, you can get a loan. And they said, yeah, basically.
Yeah.
Banks were giving money away ridiculously, but the feds finally stepped in and said, no, stop this. This is insane.
Hmm.
So that's the big difference that we're seeing. I don't personally see a crash. and I've been saying this for the past year, is that I see an adjustment happening, and we're feeling the adjustment right now, but we're in the business. You and I
Okay.
see this all the time. The general public doesn't see this. It's like, I'm not into cars, so I don't know what's happening with cars until I want to buy a car.
All right.
So I don't see a crash happening. I see an adjustment happening. But right
No,
now,
absolutely.
at the end of the year, if someone's serious about getting a home, you tell me. It's the end of the year. It's the first week of December. If somebody wants to buy a home right now, do they have an opportunity to close before the end of the year, or are we looking at the first week of January?
No, no, I mean we're so the flip side to not as many buyers in the market, right, is mortgage companies aren't as busy. So we're closing, you know, 10, 15 days after the 12th of December. It's going to be tight to close by the end of the year. But yeah, any man between now and I would say that week of the 12th, if we can get a contract, we're closing at the end of the year for sure. So
So
it's
so buyers have until say the 12th of December, and you guys, because of the supply and demand issue, which means the banks have gotten a little bit slower and buyers have backed off. And everyone's kind of wondering, if a buyer really wants to buy a home right now, we could write an offer and close before the end of the year, allowing the seller to pack their stuff and be gone by the end of the year to get to their next destination. And
right.
buyers, as you said earlier, they can close escrow and move in right after the holidays.
Absolutely. No, and that's the other thing too is obviously it's the end of a school semester, right? So if you want your if you want your kiddo, your child to start school January 1 in a new school district, that's the best time to do it.
My suggestion to everyone, and it's not a sales pitch, if you're serious, if you have a lease that's up the end of January, let's get something done now so you can get into your place. You're not going to have a payment the first month anyway. You've already prepaid that interest. So if you want to be comfortable in buying a home, do it now. Have that 30-day time period in January or 2 weeks or whatever you're going to give yourself that freedom to be out by the end of January and get into this property. Does that make sense? Is that good advice, or is that
Yeah.
off the wall?
No, no. I mean, closing anytime in December, right? So if you close at the end of the month, minimal interest due at closing for the month of December. You skip January, so you don't have a mortgage payment in January, and then February 1 is when your first payment comes due. So again, less stress on the pocketbook, less stress on the family if you're having to move with man, here's the thing is that between a buyer and a seller, it's it's open for discussion right now, right? So again, it's all up to negotiation. So, if the buyer wants to close by the end of the year, they give, maybe there's some give and take, right? Where again, we just mentioned it, 3 months ago, there was no give. It was all whatever the seller wanted, the seller got, right? Because as a buyer, you were one of 20 people trying to buy that house.
That's right.
So you're giving whatever it takes to just to get your offer accepted. Where now, again, it's hey, I want to close by the end of the year. Make sure that I'm on title to be able to get the homestead exemption here in Texas, right? Get that discount on property taxes. And then hey, let's talk about your move out. Give you maybe a week if you want to accommodate me closing by the end of the year. Maybe I'll give you a week or whatever to get out. Not get out, but get stuff moved out. But again, that's the beauty of right now is it's up for discussion. Where I fear spring
Yeah,
is it is going to be a bloodbath again.
I think if people are going to wait till the spring to start looking or buy, they're going to see that frenzy again. They're going to see the frenzy, especially here in the Dallas area. Statistics from just 2 weeks ago, I'm looking at the statistics. On an average, a new family is moving to the Dallas area every 3 minutes.
Yeah, man,
So
that's
they
crazy.
calculated the people moving here due to jobs and all the reasons that they're moving here. So
Yeah,
if every 3 minutes you check on the board another family, another family, another family, another family, Well, wait till spring. So how many 3 minutes are there before now in spring? And everyone needs a place to live. So
Yeah.
the good news is those in the industry are going to be very, very, very busy. The bad news is for buyers is that builders can't build fast enough. And
Right.
it's not like there's going to be another 3,000 homes built by the spring.
Well, and man, 3,000 wouldn't cut it anyway.
Right.
Right.
Right. I mean,
So
some of these builders that I've spoken with in just the past week are like, Troy, do you have any buyers? I sure do. When can they get keys? Oh, probably September of next year. I'm like, why aren't you advertising that? Instead, you're advertising what you're advertising. So, and that's a whole
Mhm.
nother can of worms to open that I'm sure we'll talk about in the future. But Chris, you're amazing, man. I love working with you. I love the fact that we have this ability to do this. So let's do this
Yeah,
again soon, and let's keep everyone
absolutely.
informed and educated on what's happening with the market so they can make the best decision for them and their family.
Absolutely. Thanks for having me again.
Thank you so much for watching the video or listening to our podcast. I truly and sincerely appreciate you. If you're watching us on YouTube, please leave a comment below, click the like button, click subscribe and the bell so you're alerted every time we upload another video. If you're listening to us on our podcast, please subscribe. We're going to be updating our podcast every other week. So we'll have new information for you in regards to the real estate industry. Also, if you have any questions or have any concerns or you have something to say, if you're on YouTube, leave a comment below. I want to hear from you. I want to provide information that you need in regards to real estate. So thank you again. And as always, my friends, make it a great day.